Hello and welcome to the Investor Master Series. My name is James Boyd. Alongside with me, my good friend John McNichol. We welcome him. And we got many of you, WW, we got JP, GH, let's just go initials here. High Speed, Greg, Ocean Life, and many others. We welcome all of you here today. We also got Ricebird, BS for Billy Stewart, and Double B. That's Bill Bornhoff. And today's May 13th. Hopefully you got some nice weather where you are. I know in Salt Lake City it's been quite nice. And some of you down in Texas, I think it's supposed to be over 100 here today. So hold on to your hat. All right. Now, just real quick, I want to give us a quick reminder. We do post on X. I'll show you something in just a moment there. You can find John, you can find myself, and all of us coaches on X. Just notice it's capital J, capital B, CS. We don't reach out to anyone on X. So if anyone ever does, you know it's not us. And just always remember that's how we have our handle there. Capital first name and capital last name, first letter, and CS. Now, just real quick as we get started, remember that on our examples, we will talk about stocks and options. When we talk about options, remember that options carry a high level of risk and are not suitable for all investors. The information we talk about here today is for general informational purposes only. The information we'll talk about is stocks, technical analysis, fundamental analysis, option strategies. Would also like to kind of bring up a little intermarket analysis, talk about how some of these different asset classes are related to each other and correlating with each other currently now. We'll also talk about from time to time macro analysis. This class is really meant to be intermediate to advanced in nature. If you're brand new like Pam, everyone welcome Pam. Pam, welcome. And so just know that when you attend this class, you might say, I didn't get all of it, but just know that it's being recorded, and I'll share with you that playlist in just a moment. By the way, you can also share that with your friends. Also, our examples will be done in the Paper Money software application, known as the Thinkorswim desktop version. And also remember that investing involves risk. We always want to talk about what that risk is and to account for that. And also when we talk about short options like selling calls, selling puts, things like that, those could be assigned at any time up to expiration, regardless of the in the money amount. And today we'll talk about market conditions, which have been amazing. Okay. Hallelujah. Okay. Sorry. Not yet. No hallelujah yet. Okay. But we'll talk about market conditions. We have to definitely talk about, and the main focus of our class here today is keep money moving and maybe adjusting strategies. And we'll see that in just a moment. And managing those portfolios. Those will be the three things we talk about. Okay. Continue to keep money moving. Second, managing the portfolio. Third, adjusting the strategies. And we'll talk about why would an investor adjust a strategy. Okay. So hold on to your hat on that. Now, then what we'll talk about is we'll talk about some new examples as well. So let's go ahead here and hop right in. Now, what I'd like to do is I'm just going to bring up, I'm on the Market Watch, and what you're going to now see is I'm just going to pull up the indexes. I like to pull this up and just kind of look at this table first off, just to get a sense of where we are, what's kind of going on today, okay? So first thing that we see, and let's kind of look at this on a percent as far as the day. So first off, what do we see? Okay, we see the stocks, the semiconductors. Now, when you see that, you should be thinking to yourself, well, the investor might consider buying the group, which Kevin and I talk about on Friday, okay, or maybe some individual names. What are some individual names in the semiconductor space? Speak now or forever hold your peace. Now, what you're going to notice on the semiconductors, we see a ta hold or a ka hold. We also see a little 20-day high, okay, in the semiconductors. We also see a little, the moving average crossover happened yesterday. Script's not guaranteed for accuracy or timing, verify. And we also see a little continuing breakout on the semiconductors. Holy NVIDIA and Micron. That's not all. Now, also, if you're thinking semiconductors are up, what about the NASDAQ? Okay, there she is. The SPX is shortly behind. Gold is trying to rebound a little bit. The Swiss franc, okay, is trying to go up a little bit. Not huge percentages, but they're up a little bit. The yen, okay, a little bit. Not changing trend, but they were beat up yesterday bad and trying to get a little bounce here. Now, the Dow Jones itself down 170, UNH cratering to a fresh new low, and holy VIX, hallelujah. Okay, we were waiting to say that, weren't we? Okay, can I get a hallelujah? Now, remember when the VIX was at 60? Remember we talked about when the VIX is that high, which you don't normally see, that becomes a very, 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 very low probability trade if you were to buy puts, which are more expensive, which pushes the break even lower. And what that actually does, it means that that's a very low likelihood of being right on buying puts when the VIX is at 60. Selling puts, an opposite discussion, okay? And that's why people talk about when the VIX is high, they like to consider selling. Boy, if someone bought those puts at 60, okay, that could have been ugly. Now, the biggest actually thing is we'll talk about three bearish positions that are in this portfolio and how they fared. And thank heavens they were built-in maximum losses. So if we kind of just take away from what we see so far, semiconductors and tech leading, which by the way, we talked about the breakout kind of concept yesterday. That's not bad to see those leading. SPX right there and the Dow Jones still strong, just down 178. On a percentage basis, it's only 0.4%. So in reality, not much of a movement on the Dow. Now you got to be a little bit surprised because when the market opened up yesterday, we thought, hey, if it opens up 1,000, the market's just going to pop up and then fade. And where was the fade? It didn't come down. Now, today, what we see is a little follow through on top of that, and you'll see that on the charts. When we take a look at, let's say, the sectors, okay? Now, if we look at the sectors, what has been interesting that I want to kind of point out is, man, there has been some healthcare. That's been an area where I feel like cricket, no love for healthcare right now. There's been macro discussions on pushing down, okay, cost of drugs and so on. And you're going to see that area of healthcare, there has not been any love in healthcare. Now, it's not that I'm biased. I don't want to talk about healthcare. There just hasn't been a whole lot to talk about, okay? Now, you're going to see that real estate, okay, down, second most here today, staples, and there's utilities. So those lower beta areas in the bottom 4 of 5 positions, where you would expect them if they're getting a market rally. There's your technology. There's your communications. There's energy, industrials, and my gosh, don't look at industrials. About poked me in the eye this morning. Literally. I almost literally had to teach the class with one eye, okay? Huge rip on industrials. And by the way, when we say industrials, that's also discretionaries, okay? Now, so what do we see? Well, what we're seeing is those mid-beta, mid-volatility sectors. Now, by the way, does someone have to buy the individual stock? No. They might consider just buying the group, okay? Now, remember, ETFs are actually taught on Monday afternoon and Friday morning. Some investors might, for them, they might consider just buying the group. Now, if we pull up these charts and just get a quick look at what they look like, okay? Let's pull this up. So I'm going to just pull up the NASDAQ first off. Now, one thing I want to kind of point out, okay, is you're going to see that the NASDAQ, what was interesting today on the NASDAQ? Now, I did not draw this line this morning. These are lines we've had, okay? What do you see today? Well, we could have said yesterday that the resistance is 20,929, and I want to see if we can get above that. The coast is not clear. Things are still unsettled. Well, obviously someone didn't think so. Someone maybe watched that class from yesterday. We saw a little poke through the resistance. Again, slice through it like hot butter, okay? Now, here's the thing is, if someone's a bear, taking out the prior resistance, that's not a bearish entry. That's usually a bearish exit. And then going up to the top of the next level of resistance and slicing through it in just one day, okay? Is that a bearish entry? Probably not. That's probably a bearish exit to say, run for the hills. Those bearish investors are probably thinking, because new highs in the short term, higher highs, typically means there's higher lows, typically. And if you get higher highs and higher lows, that's an uptrend. Bearish investors, smart ones, smart bears, don't typically just go short trending stocks with no exit because those trends could potentially continue. Now, path of least resistance when we get inside this whole channel, 20,929, could go up to the top of the channel. Ladies and gentlemen, boys and girls, how far is the NASDAQ off the high? Well, NASDAQ's off the high by just 4.62%. Now, let that sink in for just a moment. Let me know when it sinks in. So here it is, and by the way, off the bottom, the NASDAQ has gone up 27% in the last 26 days, 27.9% in the last 26 days. Could you imagine someone, if they ever said out of their mouth, there's just not any opportunity? Remember, why do people trade markets when the volatility is higher? Because, as we talked about, you can have year-like returns in a short period of time. Now, volatility is not just down, it's also up as well. And boy, there has been a clinic on this topic. Okay, unbelievable. Okay, now, by the way, does it mean that every stock looks like this? Of course not. We're just talking about the index. Now, we're going to fast fire. When you look at the SPX, okay, now if I were to kind of go back and say, let's kind of draw this channel, has the SPX, okay, breached that? And if we kind of talk about where we got most of the touches, we'd have to say that SPX kind of started to poke its way through there. And if you kind of talk about most of the touches on top, we're really talking about 61.12. Now, comments usually right now are things like, I don't believe it. Well, the moral of that story, the answer to that comment is, it doesn't really matter what we believe, okay? Because belief has nothing to do with technical analysis or intermarket analysis or macro analysis or fundamental analysis. It has nothing to do with I can't believe it, okay? So we're just going to leave that and forget it. So if we take a look at this, the SPX getting also inside. Now, is that a good sign or a bad sign? Well, it's kind of taking that next step. Okay. Now, the Dow itself, before we look at the sectors, sliced its way through. Not much of a give back. Didn't even give back what we gave back about half yesterday, but still holding in there so far. Now, let's have a little fun here. The VIX is what's been interesting. Okay. The VIX going down to a new low, even lower than what we thought. We thought maybe 18's the floor, potentially. It's gotten a little bit below that here today. And I know some of you are thoroughly enjoying that in the paper money account. Now, let's kind of talk about this in terms of sectors, fast-fired sectors. Now, I want to bring up industrials, and it's been a comment that we've been talking about the last couple of days, the movement in industrials. When we say industrials, we would also include transports. If you're getting industrials to shoot up like this and your neighbor or your friend keeps calling you talking about how bad the economy is in a recession, you need to explain to them you don't normally get the industrials going up like that if we're getting a countrywide recession. The truth is there could be some states, cities, counties, and so on, regions, that they could be in recession. But the U.S. in general and the stock market, when you look at that doesn't show signs of recession, okay? You don't get a spiking up in that magnitude if someone's forecasting a recession, okay? Now, if you look at technology, what do you call those candles? I think some of us call them Eiffel Tower candlesticks. There is no such name as Eiffel Tower, but just like we saw in the NASDAQ, poking through the old resistance. And I know some of you are enjoying that. And if we take a look at, let's say, communications, slicing through the 518, we're even seeing discretionaries getting a little love, smashing its way higher. Blink. And if we take a look at the financials, which, by the way, the credit card should have told us something. It should have. when you look at Visa, MasterCard, Discover, Capital One Financial, Travelers, and so on, those cards were shooting up last week. And why would the cards be going up if it was so horrible? Now, in my mind, it could have been horrible, but on the chart, didn't show that. And so if we take kind of inventory of what we see so far, there's a lot of stocks kind of taking that next leg, okay? And it's breaking inside those old channels. Now, the comment is money flowing to US back from the EU. Well, the way we kind of like to, so first off, how would you know that? Well, you can kind of take a look at the currencies, right? Pull up $DXY. They call this the US dollar, and this is really heavy into the euro. And what we saw is when the US stock market was falling apart, the US dollar was going down. People selling the US dollar and going to the euro, going to the Canadian dollar, going, let's say, to the Swiss franc and so on, the British pound and so on, okay? And the yen, and among other currencies. It looks like there has been some stabilization. So I think your comments are fair. Now, does that mean that the European markets did hit highs as well? I cannot pull up those charts. I would like to pull up China. I can't. I can't do that, okay? So the biggest actually thing is you might do that and say, geez, are U.S. markets hitting highs and international markets? Now, the other thing we would actually kind of say here is the movement that we've been seeing so far, it's not narrow. It is wide, okay? So you can't say, well, the whole rally is being led by just one sector. We can't say that, okay? We could, but we'd be wrong up until now. Now, let's kind of talk about, so first off, any other questions? Okay, now Tech One Trades actually says, we call those candles cha-ching. Now that was funny. I wasn't expecting that. So you're the funniest person I know. All right, now let's kind of talk about some of the things in the paper money portfolio just real quick. So I kept wondering, geez, how come this portfolio is zapped through all the capital? We talked about this, but I opened up the first trade here, okay? And it's Allstate, okay? Does anybody know what kind of is a little awkward about Allstate? Can you spot where there might be a potential mistake? First trade. I said, where's all the capital? Pull up the first trade, okay? Allstate, 100 shares of Allstate, and the stock price is at 203. Now, as soon as I thought, well, how much capital is that? 100 shares times 203, that's $20,000. $20,000 of a $101,000 portfolio is 20% of the capital. Now, our job is to identify things that are outside the boundaries that we talked about on December 24th when we got started. And what you're now going to notice is this is outside the boundaries. If we go back and say, well, geez, did we show a trade where we actually just went long shares of stock and we bought that much? The answer is no. But what happened was we had an April expiration. We sold the pet and we sold the put, and that put was assigned at expiration at 190. The sold put became shares of stock. It's the obligation to buy the stock at the strike price from the time you put it on until expiration. In this case, it was at expiration. Those shares have gone from 190 to 203. So this is what kind of shows you that not every time you get assigned is it a horrible outcome. You could be the buyer of the shares, and if the stock goes up, you have the shares. You don't have to hold on to the shares. You could have sold the shares, tried to sell some of the shares. You'd have to check and see what liquidity is. Now, on this trade, what I'm going to do is, we have a covered call on this. I'm going to get out of this position because it's just tying up too much capital, okay? So what I'm going to do on this trade is I'm going to click on this, right click, create closing order, sell. And what that's going to do is it's going to take our cash, and we talked about this yesterday. That $19,000 is not uninvested. It's invested. It's covering for the current positions, meaning we had to set some capital aside to be in the current positions we are. Now be prepared. We're going to take 5 minutes and we're going to kind of go through this portfolio and try to trim okay, some positions. Now, if that sells, the capital that was at 19,000 is almost now at 40,000. That now gives us, by selling Allstate, it gives us about $20,000 freed up. What does Allstate look like on the chart? Okay, Allstate looks pretty bullish, but there might be some other things that maybe an investor might consider getting in, and you'll see that in just a moment. Now, on Amazon, what I want to do is I want to take a look at Amazon. Now, if you take a look at Amazon, what you're now going to notice is Amazon has 43 shares of stock. Is that over position size? 42 shares of stock on 193. Is this more than 8% of the capital of the portfolio? It's not. That 42 shares has really morphed into $835. Okay? Now, I'm not concerned about that. What I'm concerned about is this sold put at 185, and now that was sold at 278, and now it's at 5 cents. Now, does that rub you wrong in any way? We sold the 180 right there, sold it for 375, and now it's at 3 cents. Now, you got to remember something. Those trades, those two trades, 3 contracts total, is tying up $5,000. How much more money can you make if we hold $5,000? The answer is hardly anything. So what the investor might do is they might say, James, I want a profit take on those, and I'm going to click on, in this case, the 2 contracts, buying that back, selling those. Right click, create closing order, buy it back. What are we trying to do? I'm trying to get the capital back, okay? And now what I'm going to do is buy that back, note the commission, send the order. Now watch the buying power effect. The other one I'm going to do just real quick is this 185. And why did we buy a put so far out of the money? Well, we bought a put so far out of the money because it was reducing the amount of buying power that we need to set aside to be short the put. Does the investor need to buy that back when it's pretty much at zero? Maybe not. You just got to remember that could morph into short shares if the stock were to close below that strike price. More concerned about this one, create closing order, buy, and we're going to try to buy that back. Now, watch the buying power effect. It was at 5,000, now it's at 1,000. I'm going to go back in, make sure that position fills. How come it's not filling? And sometimes in just moving it around, 2-3 pennies can make the difference. I'm moving it up 2 pennies. So the buying power effect was, let's say, 5,000, set aside, max loss, but now it's actually 0. Now, why do we bring this up? Well, because we could have a completely bullish market, but unless we have any money, unless we have some money, it doesn't matter. The other thing is, if we're in bullish positions that are already near 100% of the maximum gain, we're tying up capital that could be used for something else. And we're thinking, oh, I feel so good, but you're not recognizing there's nothing hardly there to make left. Now, what I'm going to do is, let's just bring up just real quick. If I look at this one real quick, what I'm doing is I'm taking a look at the long call vertical. What do you got? $10 right there. Probably could get a little bit more there. Not going to touch that. Boeing, if we take a look at that, shares. Now, I do want to point this out to you, okay? We had 3 bearish trades. Caterpillar, negative delta. We had CRM, pretty much flat delta. Now was negative delta, and we had First Solar, okay? Those were the 3 bearish trades we had out of all of them, okay? There, and there. So out of, let's say, 15 total trades, 12 out of 15 of them were, let's say, bullish, 3 were bearish. The market gaps to the upside, and what you're now going to notice is, well, those 3 bearish trades go up with the overall market. Now, what I wanted, now, and by the way, they're near max loss. There's not a whole lot to do either. One that's kind of, I want to take a look at is this one that's also tying up $3,000, okay, is VZ. Now, what can we do with VZ? Well, same thing. I'm looking at what was the price that it was sold at. What's the mark now? Now remember, you're trying to sell when those options are high, and you're trying to buy them back low, or as close to zero as possible. Now, what you're now going to notice is that's tying up $3,000. Now, what I'm going to do is on VZ, I'm going to click on this, right click, create closing order. That's at 83%. Visa right above it is at 97%. That's tying up 1,000. And this is the point of our class. We got to keep the money rolling. If this uptrend continues and this portfolio stays in these positions, we're going to continue to lag the market in terms of its returns. Does that make sense? So I'm going to go into Visa. Why? Because Visa has 97% of the maximum gain. Confirm send, fire in the hole. Now, what's happening now is we're trying to get rid of some of these positions. The other one that we're noticing right here is Costco, that is pretty high, 3,000. And the other one right there is Triple M. Triple M has not filled yet. I'm going to cancel this order just real quick. Okay? Cancel. Because there's some other trades I want to look at. And I want to go back to just real quick the Costco. Costco tied up 3,000. Now, let me kind of throw something out to you. Most of the trades we see here right now are vertical trades. Is there a problem with vertical trades? What if the market goes up quite a bit and you're trying to mimic market returns? Is a vertical the same thing as shares of stock? Does it have the same upside? What if the market goes up 10% higher from now? Will an account that's sitting in verticals mimic market returns? No, it shouldn't, okay? A typical vertical on a one contract basis might have a delta of 10, okay? If the investor buys shares of stock, the delta is 1, okay, per share. And so this is where the investor might say, you know what, if the trend is stronger and we've started to break out, maybe the investor says, look, I had been doing verticals given the volatility and the choppiness, but if the trend is starting to break out, maybe the investor says, I want to go further out on that tree limb of taking strategies that have a higher delta and a greater sensitivity to direction. And that's what we're going to talk about. Now, on this one, just real quick, I can come back to this. And we sold the put for 33. It's at 1087. I'll come back to that in just a sec. Sold that one for 990. That one for sure is burnt. Okay? There's not hardly anything left. Sold this one for 1005. It's at 10 cents. So really these right there, the 16 May, the 880s, the 16 May 880s could be bought back. The question is what percent? That looks about 65%. So what I'm going to do is on this 880, we're going to right click on that, create closing order, and we're going to buy that back. Those are as close as you can get to about zero. Buy it back, confirm send, note the commission, send the order, add a buying power of 3,000. If that gets filled, that should be taken down. Want to double check. When we look at what percent do we have, that's 67%, and there's 38 days remaining. Now, some investors might say, James, that's like an 80% return ever, given that you have that many days left. And what we're going to do is we're going to buy that one back too and try to free up some capital. Now, you might say, well, you know, in real life, you don't have to do this. That's not true. If you're sitting in positions that are at 90% of the maximum gain and you run out of capital, this is kind of an important step in terms of like, how do I keep the capital moving to where I could try to get a potential return? Okay. The also thing you got to think about is if the investor stays in these positions, they feel like, hey, I'm right, but they can't really make that much more capital. And they're taking the risk of what they made, unrealized, and they're risking maximum loss. So the trade does not become really attractive in terms of reward to risk. All right. Now, what was the comment? Okay. Yep. Now, just kind of take a look at the comments just real quick. Now, by the way, those have not filled. So I want to kind of come back in here and see if we can get that. I'm going to overshoot by maybe 2 pennies higher. Okay. see if that can fill, cancel the order, filled, had a $3,000 buying power, gets actually pushed down to 1,000, okay? Now, if we come back to this, if I click on this right there, order, click on that, cancel replace order, push it back, where am I? I'm at 163. Let's go 183, kind of where the mid is now, confirm send. Now, the comment from Frankie is, hey, still feels like a change on a tweet. So guys and gals, what we need to understand is how is that different than any market? How's that different than any market? Let's take 2018, markets were ripping to the upside. 2017, market ripping to the upside. Let's say the Fed comes out and says anything. How's that any different? It's not any different, okay? At any given day, someone can come out, White House, the Fed, whatever, one of the Fed people, okay, they could say something. The stocks, they're sensitive to news. I don't know if that's just today risk. That's everyday risk, okay? Now, let's take the rest of the time now, since there's a little capital now, hopefully, let's kind of look and see if we can't talk about some positions. Now, I want to go back to just real quick. We talked about Boeing. There's an example of Boeing, and Boeing sliced through, okay, the 189, sliced through, okay, the 198. And those investors who thought the resistance was always going to be 189, well, not quite, okay? Notice that classic V pattern, and notice how that stock hung up near resistance, and when it pulled back, there were green candles. That was a little telltale. Now, I know how you feel in the paid money count. The paid money count wishes it has more than 12 shares. Noted. It's so bad sometimes. Now, I want to go back to Delta for just a second, okay? Now, when we talk about Delta, we're talking about, let's say, transports, okay? Now, what I want to do is I want to kind of talk about a position, and let's kind of say that the investor said, James, I want to have maybe more upside potential. Well, what has a higher upside potential? What doesn't cap the gains? Stock position doesn't cap the gains. Long call doesn't cap the gains, okay? Long synthetic doesn't cap the gains. Those are three main strategies where the investor might say, James, I want to be more directional and have a defined risk on all three of those trades, but I don't want to cap the upside potential. Now, what I'm going to do is I'm going to go to the trade tab. We don't normally talk about buying calls, but sometimes investors might say, James, I want to buy a call that gives the investor the right to buy the shares at the strike price from now to expiration. Now, wait. Who holds that right? The buyer does. So if we buy a call, that long call can morph into 100 shares of stock, assuming we do one contract. Now, sometimes what the investor might do is they might say, James, what I'm going to do is I'm going to buy a call and I'm going to risk all of it, okay? Now, when we say all of it, how much are we talking about here? Well, if we buy the call for the June expiry at the 50, well, if we click on that 425 and maybe got filled at 420, the risk would be what the investor pays for the call. Now, what's the enemy to long calls? What's the enemy? Well, the enemy is we want the stock to go up quickly. We want the stock to get further and further and further and further above the strike, so that way there's more intrinsic value. Think equity. The higher and higher intrinsic value / equity, the more the option becomes worth more. Okay? Now, the other thing that's negative to this is if volatility were to drop, that could also push down the option value at that time. So two negatives, time decay or time decay, and second, volatility. Okay, those are two negatives. Now, you hope, or it's the strategy of someone who's buying the long call, they're really wanting the stock to, in other words, go up and to counter those. Okay, now what I'm going to do is two things of time decay and volatility. I'm going to click on First Triggers SEQ, right click on that line, create opposite order. Now what we're going to do is we're going to say sell the call. Now, where could maybe the investor sell the call? Well, they might say, James, I want to sell that call if that stock maybe went up to $58. Now, by the way, could you run through a quick analysis? Could you kind of say, hey, look, could I kind of get an idea what might happen? Sure. Let's kind of say this. Let's go to this where it says option theoreticals and Greeks. Let's hypothetically say that it takes 2 weeks, and it's just hypothetical, okay? Here we are on May 13th. Let's say it takes 2 weeks and the stock goes up $5. Now, what happens now is it takes out the time decay, okay? So those options now are $4.25. If the stock goes up $5 and 2 weeks goes out, the calls become worth potentially, theoretically, $7.70, but that does not take out volatility. I'm going to take out 5% volatility. What does it do to the option price? It pushes it down. Now, what I'm going to do is we could say, hey, look, if it goes to 760, sell the call, or we could just say, look, go market, go to GTC, click on that gear, and we're going to say, look, if Delta goes at or above $58. Now, notice where that sideways V is pointed. It's pointed towards Delta. So we're saying, look, if Delta, okay, is greater or equal to $58, if we go to $58 or higher, sell the call. Now, we don't know exactly what that call could be worth because we don't know how long it's going to take. What if it goes up there in a week, 3 days? Well, we would probably think that maybe the option would be worth more because there's less time decay on the option example we gave for theoretical pricing. Save, confirm, send, just buying a call, okay? We're going to do this right in the IRA account, going long, and what you're going to notice is, what's the risk? $420. And what you're now, by the way, could investors set a stop? They could, but in this case, we're going to risk all the premium, okay? And we're going to try to get that upside movement. Now, I want to kind of move it a little bit. You're going to notice that if we looked at its twin cousin, UAL, you're going to see that that's had a pretty strong move. That's kind of a similar move. And you're going to also see the cruise line ships as well. Now, UAL is kind of right on that cusp as far as could it reverse. This one might be where the investor says, James, I want to set an alert on this. Keep an eye on it. It's cruise ships, RCL, CCL, NC8, NCLH. They're kind of all starting to poke their way through resistance. The weakest one is Norwegian Cruise Lines. But the CCL, that's the one, Carnival, that's poked through that last level right there. Now, I want to move back to just real quick a couple stocks. I want to go back to just real quick Tesla. I don't have any comment on Tesla outside. It's kind of triggering back to the upside. Okay. Paper money account is bullish, that one. Meta is firing back to the upside. The paper money account is long that one as well. But I do want to go back to ARM. Okay. Now, if you look at ARM, we talked about this yesterday, saying to ourselves, could this stock start to break resistance? Okay. We even talked about the higher lows on the bottom. And what you're now going to notice is, lo and behold, here we are. Now, one of the most interesting things is when the stock finally gets a breakout, then the investor might say, well, yeah, but I'm looking for the stock to pull back and then bounce. Then I'm going to do something. Now, if we had $1 for every time someone said that, someone might be a millionaire in paper, okay? So the thing is what is your actual entry signal? If someone says, I'm waiting for a breakout and the bounce, fine. But are we now discrediting the breakout? What was wrong with the breakout? And so sometimes we say stuff because we're not willing to commit maybe ever. Just like to kind of say stuff. So let's say the investor said, James, I want to take this trade, a bullish, and what I want to do is I'm going to buy the shares of the stock, click on the OCO bracket, and what I'm going to do in this case is I'm going to put a target up here, and let's say that target is right about, I'm going to set the target, what's the lower target? That lower end, if we consider this. Let's say the investor said 146. Now, are we saying that it's going to go to 146? No. Okay? That's just a target. We're just saying, look, if we go to 146 and or higher, sell the position. Now, underneath, okay, if we're talking about, like, say, the moving averages, you got 121, and if we look at this more recent low, 115. If we took 121.45 less 2%, 119.02. Okay? So if I'm going to put it right there, 119.02. Now, someone might look at this and say, oh, the reward risk ratio is favorable. That doesn't mean anything to me, okay? Because it doesn't state the probability of it going to those levels, and we don't know what those probabilities are ahead of time per se. We just don't know, okay? The second thing is, you could set a tight stop and then make the reward risk look favorable. So it can kind of be fabricated what that reward risk is, and I don't think just looking at what's my potential reward to risk really is painting the whole story, okay? Which is important. Now, what I'm going to do is I'm going to come back to the capital amount. If we said, hey, we're going to try to buy $6,000 worth of stock, what I'm going to do is it's going to be about 47 shares. And if we did 47 shares, here's what that trade would look like, okay? Now, remember, I gave you a homework assignment yesterday. I said, hey, I want you to go out and see if you can't find some stocks making some higher lows into resistance. Just following through. I did my homework assignment, okay? So ARM is actually one that we're seeing a little poke as well. Now, the other one is I want to just kind of go back to just real quick Palantir. We talked about how that was linked to the asset class as of 5 years ago, the new asset class. What has it done? Well, as that asset class, I can't say what that asset class is. You probably know exactly where I'm going with that. But we actually just hit a brand new high here today. Tell me what the second stock is that we talked about that is correlated to that asset class. Starts with an M, ends with an R. You remember it? We only talked about two of them. Okay? Now, what I'm going to do is it's MSTR. Now, if you look at MicroStrategy, it's not going up as much as Palantir. This might be kind of in a little pullback, but it's not so much of a pullback yet. It's Palantir that has been a horse. Okay, now, last trade that we'll do here. Let's say the investor said, James, I'm seeing a little run to the upside. Now, some like to do this where they go style, candle, Hakanashi. Okay? And some like to look at this and say, James, is this made, this smooths out the candles. We could probably say there's like a cup. And could this be a handle on the right-hand side? Could it be? Now, if we went back and looked at this, we'd say maybe there's the rim of the cup. Now, if we looked and said, could that be maybe the handle? The width, okay? And again, I'm just doing my homework assignment, okay? Got an alert on Palantir this morning. Palantir has a width from 76 to 120. I don't know how many dollars that is. Let's say $45. $45 on top of 163, we're probably talking about 168 price target. We don't know if it's going to go to that area. We don't know, okay? It's just a price target. Now, what I'm going to do here in closing here, I'm going to go back to this Palantir. Now, the good thing about Palantir is it's volatile. The bad thing is it's volatile. Volatility cuts both ways, and that implied volatility is pretty rich given just a VIX of 17. Now, let's say the investor says, hey, look, I'm going to sell the 120 put. Delta is actually saying the chances of the stock to close below the strike by a penny. It's also stating theoretically, really if the stock were to go up or down $1, how much would the option move by? We're going to sell the 120 and then buy the 110. Now, if we did that, we're widening out the spread, and thus it makes the credit a little bit bigger and the maximum loss. So that's going to be our last trade here today. So I think kind of in terms of takeaways, with the indexes, with the sectors getting a little push and volatility falling, etc., there's some opportunities maybe that you're probably seeing out there to practice some bullish examples. I want you to continue to focus on stocks, making some higher lows into resistance, but also be watching for some stocks that are hitting 20-day highs, okay? Which is one of the scripts as well we talked about. I also want you to be watching really the breakout script as well. So those two columns, the 20-day high and the breakout script, okay? Now I'm out of my time here. I want to give you a quick heads up. If we go back to this just real quick, you can actually follow us right on our YouTube page, okay? There's our YouTube page link. Second, you can also follow myself and John right on X. We do post educational content there. And also, if you said, where's the playlist for this class so I can bookmark it? There it is. Now, last link that I want to make sure that you bookmark is the Schwab Coaching webpage. What you're going to notice is right on our live webcast and virtual workshops right there that I'm pointing at, scroll down. And now what you're going to see is the next class coming up is going to be Getting Started with Options by Cameron May. I want to thank John McNichol for helping out in chat, and thanks to all of you. We needed to do what we did in the account because it was pretty much tapped out, okay? And we needed to make those adjustments, and that's what we talked about here today, and it was timely. Now remember, with what we discussed, it was done for example, illustrative purposes only. All investing involves risk. Stay tuned for Cameron May coming up next. Take care. Bye-bye.